Hello and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So first, let's discuss supply chains, a big driver of decade-high inflation in 2022. We're seeing some statistics and strong evidence that those have improved dramatically. Number two, people aren't saving very much at all, especially compared to the historically high savings rate that we saw during the pandemic after the government gave direct payment and so much fiscal stimulus to US citizens. And finally, recessions. Everybody's worried about the recession. There's no doubt there's a slowdown underway, but let's take a look at the connection between the labor market and why recessions historically always rely on job loss for there to be one. So this chart is a look at the ISM manufacturing report on business supplier deliveries. So this is one question. It's part of a broader survey that go out to business leaders and owners of companies to say, how are different aspects of your business doing? If you look at delivery times from suppliers, when it's below 50, that means it's faster. When it's above 50, it means slower. Couple notes from this. Number one, below 50, it's pretty obvious there. But you can look at the rate of supplier delivery performance, the best in nearly 15 years, and a sharp decline. If you look at the stats in the survey, 88% of respondents said delivery times are the same or better. So really strong performance from supplier deliveries after that real logjam that we saw during 2022. It's costing less to ship goods globally. This Baltic Index look at global shipping cost, a weighted average among 7 major global ports around the globe. And it's pretty significant. You can see how much it spiked up during this latter half of 2021 into 2022. It cost a lot more for companies to ship goods globally. That is back down to its lowest level since early 2021. So a little bit back to normalcy in terms of cost and delivery performance for supply chains. That's good news, number one, for potential inflation to come down in 2023. Consumer, perhaps some concern here. Take a look at the US personal savings rate plummeting. Now, some of this is on the heels of that historically high savings rate up north of 30% during the pandemic, where people were just receiving direct payments, many of which never were laid off or lost their jobs. And most people just put it into savings accounts or purchased homes with this pent up savings. But if you look at it right now, down to 2.4%. So Americans are saving less than anything we've seen in recent history. A couple bits of context to this. We do still see that there perhaps maybe $1 trillion left over from that large accumulated savings during the past couple of years that consumers may be banking on here in the short term. Credit balances, the credit card side of the situation, are they going into debt? Yes, they are, right? Consumers in the US, we can look at the US debt balance from credit cards. It has been rising over the past several months. It's its second highest level in the past 20 years. And if you look at the total number of accounts, Americans are holding more credit card accounts than they ever have in the past 20 years. So consumers relying a little bit more, a lot more on credit cards here during the past few months. So perhaps the consumer balance sheet could be feeling some pressure over the next year. And finally, the big word, the R word, the recession. Everybody's worried about it, right? A couple key points about this. We talked last time about the large number of job openings that were still out there. Companies were never able to fill those post-pandemic. But if you look historically, recessions don't occur unless you have a dramatic spike in the unemployment rate, currently at 3.5%. So we haven't seen that spike. We have seen some small examples of layoffs of some pretty major companies. So there are going to be some to come. But with the large amount of job openings, perhaps that could insulate the amount of layoffs across the country relative if we had already filled those jobs and we were really at that full employment level. So something to monitor. Labor market is going to be the key as to whether this is going to be a steep or just a mild economic drawdown over the next 12 months. And finally, Dyson, famous for high quality, a little bit expensive, but high quality vacuums, dipping their toes into the audio business, right? Competing with those of Sony and Beats and things like that. So they've got these new headphones, but they've got this, if you remember Batman, the Bane, it looks like a Bane device over the face. And what that is it is combined with an air purifier to breathe in fresh, non-polluted air while you're listening to your noise canceling headphones. So we are living in the future, I think, because this is very weird to me. I don't know how many people would wear this, perhaps more than I think, especially in maybe highly polluted areas. Right now, cost looking at about 1,000 US dollars. So not cheap to have your own little hub of noise canceling music while you have nice fresh air to come in there. So I'll be interested to see how popular these are. But Dyson dipping their toes in a big way, I would say, into the audio things, because I don't remember too many headphones having air purifiers. So we'll see. With that, I want to thank everyone for watching, and we'll see you next time.